Hey, what's going on, guys? This is Terrence Ray, and this is welcome to my Fibonacci Masterclass. I'm going to go over in this class, well, give a brief introduction, as you see on the screen, on who Fibonacci is, Leonardo Fibonacci, and just some basic stuff. I'm just Googling. We're just gonna go online and get some basic stuff. Then I'm going to talk about some Fibonacci and how it applies to certain things in nature. Then we're gonna go to the charts and give you something that you can use to do your own trading with. You may be able to use this outside of this realm, but we're gonna deal with it with trading. And it doesn't matter what you trade. I don't care if it's crypto, stocks, forex. I really don't care what it is. As long if it got a chart to it and you're trading it, you can use this. You can it's applicable to your trading, especially if you're in technical analysis. Now, you just do fundamentals and you buy and hold. You can even use it there, but let's go. So what you see on the screen, basically, the story of Fibonacci. Leonardo Fibonacci was born in Pisa, Italy, around 1170, and then it talks about his father. Um, I don't even know how to say his name. Guglielmo he was nicknamed Bonaccio, which means good natured. And it talks about his mother. You can this is stuff basically I'm gonna put, and this is just www.fibonacci.com. So you can just look this up. I'll put this link in the show notes, where you can Google up and read this. I'm not gonna read all of this. Talks about his travels. I will say it says Leonardo recognized that arithmetic with Hindu Arabic numerals are simpler and more efficient than with Roman numerals. And it says later in life, he traveled throughout the Mediterranean world to study under the leading Arab mathematicians of the time. Leonardo returned from his travels around 1200. Says at age 32, he published what he had learned in Liberace, which means book of abacus or book of calculation, and thereby introduced Hindu Arabic numerals to Europe. And you can see they have some pages there. Now, it says in the 19th century, a statue of Fibonacci was constructed and erected in Pisa. It says the Fibonacci sequence, Leonardo of Pisa is perhaps best well known for the famous Fibonacci sequence. This sequence appears in various family trees and spiral patterns of leaves and seeds. This is what we want to get to. Now, here go the sequence. It says the Fibonacci sequence has been named after him, blah, blah, blah. You see the sequence right here. It goes, and you see how it's like 1, 2, 3, and then go 5, 8, 13, 21, 34, 55, 89, and so on. Now, if you see a lot of traders do videos online, like you watching YouTube videos, you'll see them with their moving averages on their charts. A lot of them have like 8, 21, 55, 34. You'll see those on. This is where they're getting it from. They're using Fibonacci sequences to like use their moving average, right? Um, I'll show you some examples of that. Now you can read this if you want. It's really not this part of it. How isn't important. Excuse me. And what I will read this part right here. Let's see. With these pictures, it becomes I don't know clear what the sequence actually represents. This pattern is seen in many natural phenomena, for example, in the smallest notulus and even in the shape of the largest galaxies. The sequence also has directly connected with the golden ratio and is used throughout history in many works of art, such as the Mona Lisa. But it doesn't stop there. The Fibonacci sequence can even be heard in music. The best example is Lateralius by metal band Tool. I'm not familiar with that. let's go to, let's see if we can get some more examples. I got another site that I'm going to pull up. I want you guys to see. I'm going to drop it in over here. Let's look at this one right here. This site right here is www.mathnasium.com. And you can see, um, it's going to, I think in here, flower petals, right? It says the number of petals in a flower consistently. I don't want no cookies. The number of petals in a flower consistently follows the Fibonacci sequence. Famous examples include the lily, which has 3 petals, buttercups, which have 5, the chicories have 21, the daisies have 34, and so on. Let's see. And it talks about, it says, uh, seed heads. The head of a flower is also subject to Fibonacci processes. Typically, seeds are produced at the center and then migrate towards the outside to fill all the space. Sunflowers provide a great example of these spiraling patterns. You see, if you look at it, it's saying that how it's spiraling. Pine cones, similarly, the seed pods on a pine cone are arranged in a spiral pattern. So it's saying, for example, a 3-5 cone is a cone which meets at the back after 3 steps along the left spiral and 5 steps along the right. Fruits and vegetables. It says, likewise, similar spiraling patterns can be found on pineapples and cauliflower. Tree branches. Like if you read shells, look at this shell. It's saying that that same sequence where it's counting out, see if I can pull it up right here, 3, 5, 8, 13, 21. It's saying that this right here has going out is a Fibonacci ratio. Spiral galaxies. Not surprisingly, spiral galaxies also follow the familiar Fibonacci pattern. The Milky Way has several spiral arms, each of them a logarithmic spiral of about 12 degrees. As an interesting aside, spiral galaxies appear to defy Newtonian physics. And then it goes in and it shows you that. You can come read on this website, Faces. Faces, both human and non human, abound with examples of the golden ratio. The mouth and nose are each positioned at golden sections of the distance between the eyes and the bottom of the chin. And you can come down as an example. The most beautiful smiles are those in which central incisors are 1.618 wider than the lateral incisors, which are 1.618 wider than canines, and so on. Animal bodies, even the bodies exhibit proportions that are consistent with Fibonacci numbers. Look at this is look, this ain't made up. This is it's everywhere. It says DNA molecules. Even the microscopic realm is not immune to Fibonacci. The DNA molecule measures 34 angstroms long by 21 angstroms wide for each full cycle of its double helix spiral. These numbers, 34 and 21, are numbers in the Fibonacci series, and their ratio is 1.619, closely approximately to pi or 1.618. So you see, and if you go all the way down, you can come and read all these different articles up on it. I just wanted to give you a backdrop um, on Fibonacci. I even seen where I know of a particular nutritionist that uses the ratio for like dieting, how much food to eat. I won't give that away because you gotta I paid for it to get that information, so it's his to sell, but I've heard it there too. So this is everywhere you look. So why wouldn't it be in trading? Now, I've seen certain, I won't name them, talk about like technical analysis and things like that. They'll call it voodoo, they'll say whatever, or it don't. It's too obvious. It's in the charts. And I'm getting ready to go to the charts to show you. I just wanted to give a quick backdrop, lay a foundation. A lot of this stuff, these two sites that I pulled from, I just Googled these. I just wanted to have something to give a little foundation for you. You can look this stuff up and read on it in your own time. Now that I got that there to let you know that I just didn't pull this from, out my behind. Let's look at it. Let's find it on the chart. This is where we want to be. Now, I got about 5 chart instances that I've pulled up. And this is exactly how I find targets. If you follow my channel, you'll see when I got projections and stuff like that. This is exactly how I find them. And if you've been following, like lately, they've been hitting dead on. So let's go and let's look at right now. We got micro strategy up. This is the last one. Well, the first one. We'll go ahead and do this one first since I already got it up. If you see, let's take everything off. Now, first of all, I'm probably one of few that uses Fibonacci extensions. Most people will use the retracement and then they will project that retracement out. I don't do it that way. What I do, you want to find, and I'm also going to take, let's make this chart. Let's get naked. Nothing's on it. Nothing but some candlesticks and some trend lines. Generally, what I look for is a breakout of some sort. I see a market moving fast or it broke out of something. This is a trend following. You can use it to get in early, uh, but I generally do it after the move is started. Well, there are ways to to use it to get in early too. Now, you can see right here, this trend line, we got a gap up and it broke out. You want to find points in the market, turning points. You need turning points. Like you want to see, I'm going to come back to MicroStrategy. A better one to use to start out is going to be Apple. I promise you, I'm going to come back to MicroStrategy and I'm going to show you. But I want to come to Apple first. Let's go out about 5 years. And I'm going to take everything off of this chart because I remember this. Uh, Now, we're going to go to Apple uh, August 17th, 2022. Where's August 17th? It's going to be, well, we got to go to 2022. We're going to go back here, right here. Now, you see this, obviously, this is a turning point. This is where the market turned. But I should have just, bear with me. Every time I move it, it moves. Let's do it like this. So I don't want you to move no more. There you go. Now, zoom out just a little bit. All right. Obviously, this is a turning point, right? We see we got right here, the market turned, gap down, and then we got a low right here, and then a pullback. So from this point to this point where we get the turn, once you get a turn, like this, even from here to here, right? Even though I'm not going that far, this is what I'm looking at: a high, a low. This low was put in, and the market started going up. At that point, I put on a Fibonacci retracement. Click from here to here, from the top to the bottom. You want to use your retracement. This is how TerrenceRe does it. You're going to put your retracement on. Now, your sweet spot. Yeah. I really wish it would quit losing my spot. Here we go. So now your sweet spot is the 38.2 and the 61.8. Now, some platforms will have 50% on there. That's not a actual Fibonacci retracement, but some people would just trade once a stock or whatever they're trading retraces to 50% of the initial move. Some people will will go ahead and get short right here, right? So what you want to see is for the market to come within this range between that. That's why I always call this my sweet spot between the 618 and the 38.2%. All these are is percentages of the retracement of this move. So from here to here, right in here is 38%. This is 61% or 61.8. The market retraced to this spot. And then once it got into this area, it took off downwards. Like it exploded down. You can see this one red candle. It's so you can see like, hey, this was a big move. Like you can see it. It hit here and then blew down. Like you can't deny that something happened there. This is the beginning of an impulse move. Something happened in the market. I don't know if it was news. Something happened. If I went back to look at the news on this day, August, what day is this? This is August 26th, 2022. I guarantee you there was some news event on this day. Something happened. So with this happening, what I do then is I come back and I draw my Fibonacci extension. Your retracement is only going to have 2 points from the beginning of the move to the end of the perceived first move. Like this is your first move or first wave from here to here. So you draw your retracement from here to here. You want to see it pull back in between here and take out this low. Now, I've seen it come back here and touch and take out this low, and you still get the move. I've seen it hit just here, and you still get a move. I don't trade those. Those aren't as you won't see, in my opinion, from my experience, you won't see the same type of movement in the market when you get those. It can still go, but generally you want to see the market pull back into one of these areas in between 38.2% and 61.8. And then once you get that, you come and you do your extension, your fib extension. Fib extensions are going to have 3 points. Retracements are going to have 2 points. So you're going to go 1, that's the beginning. Down to the middle is 2. Click back up is 3. That is the beginning of your Fibonacci extension. And that's how I use to get my targets. Now you will see if you watching this, you paying attention. Look what it did. Gap down past the first level. Hit this on the 100. So that means 100%. That means that from here to here is equal from here to here. But many call in harmonics, they call that AB, which this would be A, B equals C, D. And this is B to C. So you see it hit here and it even made a doji. So it even made a doji right there. Like you can tell that that was something. Like, hey, right? Keep digging. So what's the next level? Came down to 1618. Look at it. Look how the market touched this level, pushed back, went back, stayed around here for about, let's see, 1, 2, 3, 4, 5, 6 days, pulled back, didn't go past this level, came back down, trickled down. Here we go again on Apple, down to 2618. Then it pulled back a little bit, down here to 3618. Pulled all the way back up to the 1618. Chop it didn't chop for about 2 months. Then look what it did. Came down, hit the last level, It hit this level, then hit this one on 4618. Seems crazy, don't it? It's not. I'm gonna show you some more. Just so I want you guys to make sure you got that one. Now let's go back. That's Apple. Let's take a look at Nike during the pandemic. Let's look at Nike during the pandemic. At the start of the pandemic, I remember this one completely. Now, one thing I will say, when picking these levels going to the downside, they don't always hit all the levels to the down. They don't always hit all the levels anyway. This is just one way of getting price targets. I generally see the 1618 hit the most. That one and then 100. Anything after that is a bonus if you can get in at the right time. Back here in Nike, this is February 14th, 2020. This is when the pandemic started, because here's the gap down and the market just took off. Right. I'm going to show you from this point. I'm going to show you an easy way to find turning points. But you can see from this top down to here, pull back. Where did it pull back? Right in between the sweet spot. You come in, then you throw your Fibonacci extensions on. Boom, boom. Now look, came down, hit the 618. Look how it hit it, chopped, gap down to the 100 to stay here for 2 days. Gap down again, went to the 1618. Now that's as far as it went. But you can see that these levels held. Because the market has a natural drift to go higher. Like the market naturally has a positive drift to it. With that being said, I think from what I've seen, you are more prone on the bullish trades to hit more of the levels than you are when it's going to the downside. So I try to keep that in mind when trading. And you can even see from the retracement, when the market did turn, these retracement levels from this pull back into here. You can see these positions, these retracement levels held. Because it's the same thing going back the other way if you don't take off the retracement right here. So just remember, when you do your retracements, you got 2 points. You go from the top to the bottom, and then you want to see the market come. Now, some people will get short, like after they got this big move. Once it retraces back in between here, like maybe once it hits the 38.2, they'll go ahead and short. That's not a way that I do it. I like to see it pull back in there and then take this low out. So you may say it's kind of hard for you to see where to get in at because you can't tell the highs and the lows. One thing that I like to put on my charts, and if you follow the channel, you've probably seen fractals. Let's put these fractals on. Here's the cheat code. Here's the fractal. There it is. What I call the what they call it, the fractal or something like that. I'm gonna say this so I don't have to keep doing it. Yep. So you see that? Now let's go back and look. Let's go back and look right here. See, it's a fractal right here. Fractals just show turns in the market, where the market actually turns. So you got a fractal here, you got a fractal here, and you got a fractal here. And I just did it from point, 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 and then I got my levels. These would be take profit levels. So if I got in here, you could set a take profit level here or here. So once it gap down here, or once you've seen it get back into this level, you can automatically maybe project out. Um, I generally like to wait till it breaks here. So then you can go I would have put my stop up here or either right here, above this fractal. Put my take profit maybe here or here. So that's a way of doing it. Let's go take a look at the SPX. Then I'm gonna give you you're gonna say, well, how um how can I find this? It look, it's kind of hard. I can see them, I can spot them in the, in the market when they move. Ideally, you want to be looking for flags. You want to look for like bull flags, bear flags. You want to look for when the market breaks out and then pulls back. Here we go right here. Another one came down, pulled back. And here at the bottom, down, up, pull back. It's a perfect one. I'm going to go from one point, another point. There you go. Now, I'm going to blow this up so you guys can see it. Look at that. Low to high. Look where it pulled back to, right here at this sweet spot, right here in this level. Anywhere between here and here. Now, the key is you want to see an explosion of the move up out of there. Like once it hit here, look at this candle. This one green candlestick took out 3 candlesticks. Boom. Now, once you see that, you put your extensions on, you come do Fibonacci extension. 0.1, 2, 3. Boom. 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 You can see it hitting the levels. Hey, you making this up, guys. You can either see when it did. Now it did come hit this level and then retrace. That's why I said, so if you just went from down here at the point and you just went to the 1618. Once it broke here, stop down here or right here. I'll probably put my stop down here, all the way up here, all the way there. It didn't even look back, to be honest with you. You'd still been in the SPX. Hit the 2618, up here to 3, up here to 4.2. Look at, and you can tell when the market is hitting these levels are acting as resistance and then support. Break out of there, hit there. And you still got it. Now it's still drifting higher. You just got to be a little careful once you start getting up into here, because at some point. But I'll even show you something. I'll show you even one better, which how I really got bullish on the SPX. And all of these I talked about in my videos. We're gonna go out. We're gonna do a monthly. Now this is crazy. I'm gonna show you on the monthly. The SPX. Look at this. The only thing about this one is because it's a monthly candlestick, so a lot can go on in a month. But I basically came from right here. Now some may say, well, why you didn't come from this point? But I did from here because I just looked at this wick right here. I know when I see it. Look at that. I can tell when I see it. Came back to the 618. You come right here, click here, here, here. Look at that. Came back, hit the 100. I mean, perfect. Perfect. So according to now, yeah, you can see the next level up is 50. What is that? 5,395.28. I think we'll get a pullback before we hit there. If we do, because you can see the trend line. This trend line going all the way up from way back here somewhere. So I was still, like I said, a lot can happen in a month. And I think I'm doing this video with no more trading days in the month. So we should get a new monthly candle next week, and we see where it's gonna go when it opens up. I expect maybe to get up into this area and then start pulling back just because of the trend line, but we'll see. Let's go and look at. I'm gonna show you Coinbase. We're gonna get into some more bullish setups, and then I'm gonna add more to this. This is gonna be a part one. So I don't want to make it too long. So I will come back and then do more. And I'm gonna show you guys how to scan to find some of this stuff. The scanning one I will put out maybe next week. But today We're gonna finish up with coin, and then I'm gonna go back to micro strategy, and this will be a part one, and we'll add more to it. Now, this one, you could have went from here to here, but I didn't. When I seen this one, I'm gonna show you guys how I seen it, because I will put up. Let's see. I'm gonna put up. That's not the one. I'm gonna do that. Talk about that on the next video. So if you had something on like a MACD or some indicators, right? This MACD, these moving averages crossed over right here. And so when I seen that, I automatically went from bottom low to here to here. Now, I knew when I seen that. Check this out. Let's blow this up. You can look at it, you guys. You can see. Let's see. You can see when the moving averages crossed over, up here, pull back. Because I seen the gap. I started looking at it. I seen the gap. You see it pull back to the 38.2. Now watch this. It's gonna get crazy. I was calling these levels out in Coinbase. Look at it. 100, 1618. Look, and you can see when it hit the 1618, the next day when it broke up a high higher than that, you could see how it wicked. It then acted as support. Next level. Wick right here on 2618. Now this is Coinbase. Coinbase is moving step by step with Bitcoin. Next level, 3618. Look at that wick. Pull back. Next level, 42. This is the 4236 level right here. For me, once you get this level, I start to get out. Like, even on bullish trades, you've gotten good money here. You got extra money here. Now you got money. You got real good money. I don't know. It can hit this level. Uh, but at this point, you eating good. But this is how, guys. This is how I project out. This is how it's done. This is exactly how I do it. Just like this. And when we go back to micro strategy, I'm gonna show you this. And then I'm gonna, like I said, the part two to this video, I'm gonna go over these same stocks. I'm gonna show you how to scan, or how I scan for it. There are certain ways I scan for it to find it, to find these trades. And I'll even show you a little secret on when to get out, or when I think it's time to get out. Right now, you got this point right here, right? You see, it's a fractal right here if you can't see it on the screen. But at the bottom of this is a turning point. It's a fractal here. I'm gonna put the retracement on top. I mean, from bottom to top, or your first click on your retracement is gonna be from the start of the move until the end of the first move, right there. Look at that. Look where it came down here and sat at 38.2. It even sat down for a day or two. Then you got that big green candle gap out of there. A good hint is look for the gap. You want to look for the gap. You're gonna come right here. Now that we got our retracement zone, our retracement zone hit. Our retracement target has been hit. We're gonna go from point one to the top, two to the bottom, three. I like to put fractals on because the fractal is gonna pretty much guide you on where to put your points. Now look at MicroStrategy. Gap. Look where it gapped to. Made a doji right there at the first level. Gapped again, hit 100. Gapped again, hit 1618, and then pulled back a little bit. Went up and gapped again. Look what it did right here at the 2618. Wicked and closed right there on it. The next day went up, stayed on it. Up, touched it, chopped around here. Then look what it did. Doop, doop, doop. Hit right here. Now, I'll go ahead and say it. You got a impulse within the impulse. And you have those. You can go intraday and find impulse moves within the impulse. Meaning, like, so if this is 1, 2, 3. If you said 4, then 5. This 5 move right here. Now I'm counting Elliott waves. I'll talk a little bit more about that in part 2. But you can see right here. Look at this. See, I could see that. Look at that. You see how you got right here? You got a this would be called an AB. A B. This is B C and then C D. A lot of times what those are is reversal harmonic patterns. Whenever you get like a ABC pattern in the fourth wave or to complete the fifth wave, a lot of times you will get like a reversal pattern. So it's like it is a reversal, it's a harmonic. So we get like a down move, and that doesn't mean that it can't continue to go up, but you generally get down moves right there. But I'm gonna take these off so you can see that better. I could just see that. You can see the move. Now, I'm gonna put the I didn't even have to put the retracement on because I could just see it. Watch how perfect the levels are. From here, boom. Look at that. It pulled right back on MicroStrategy right here in the sweet zone, 38.2. Boom, boom, boom. Hit 100 and then turn. Because you may say, like, well, why I didn't go to 1618? And there's no guarantee that it's gonna go to that. But when you get one already at the end of a move, like this move has already fully extended. I don't expect these points for the market to continue to hit these points. This was the beginning of the move down here at the bottom, right? So you can see it. So right here at the beginning of the move, this is where I want to be looking for the full extension. After the market here is already overstretched. And then I'll show you in part 2, we're going to go over how to use oscillators to help you identify when to get out. If you're in the beginning of the move or at the end of the move, we'll talk about some wave counting and Elliott wave type stuff. But this video will only be for members. As long as you're a member, you'll be able to watch the video, and I'll continue to add to this series, and I'm going to continue to make other videos for members only. But I'm giving away the keys to the kingdom right here. You get this down, you can pretty much find your own stuff to buy. I don't care what it is. You start seeing stuff, these patterns, and you can recognize them when you see them. You can, especially during bull runs. This is more effective. They're in bearish trades and bullish trades, but the market tends to go up more than it goes down. And I can show somebody that, like, I may get somebody to argue and be like, no, that's not true. No, it is true. This is the SPX right here. This is the SPX. So, if I take off, let's take all this off. Um, let's just do a naked chart because I wanna. This ain't up for debate. These are monthly candlesticks. This is from way back. This is a max monthly chart. I don't even know how many years this go back, but you can see the market tends to go up more than it goes down. So with that being said, I generally try to look for these type patterns in um, bullish trades. If I see it in a bearish trade, I definitely don't try to hold to those far out. Once I get it to the 1618, I'll get out unless it's on like a 1 minute time frame and I'm trading like futures or something like that, or scalping some forex or something. So hey guys, hopefully you got something out of this video. You can leave the members can leave questions on this video, comment. If you didn't get something, comment that. You want to see more examples, comment that. That's what the members area is for. And this video will only be available for members. And then I'm going to add on to a part 2 because part 2 We're going to go over scanning for these setups. We're going to go over how to use oscillators to find these setups, how to use oscillators to get out of these setups. I aim to over deliver. And with that, guys, I'm going to be out. Peace.